Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, we will be working with the awesome oscillator. This is basically a momentum indicator which tries to measure and indicate the precise changes in the underlying driving force of the instrument, and we can utilize it to give us an idea of the trend and subsequent reversal if any. So we are going to work with this. We will get to know how we can utilize it on our algorithm, and then of course in the later session we will also try to develop some further complex strategy while adding more indicators and some optimizing techniques. Before we get started, I would like to remind you that this is simply a tutorial session and nothing is to be constructed as a advice for any trade or any particular setup, and no claim is being made for the profitability or otherwise of any algorithms which you will be developing during the session. And suppose if you feel anything is efficient and if you want to use it, I would suggest that you do extensive trial runs for a long amount of time, and of course you should also keep it running on the demo account to get an idea of the real time workings of the algorithm. On that note, let's get started. Let us see the charting first. This is the 4 hourly chart for USD JPY, and you can utilize any instrument USD JPY, GBP USD, USD CHF, Euro USD, one and the same. But since we are working as a default instrument, most of the time we work with Euro USD, so we will stick with that. But I would suggest you try different instrument in your algorithm development, so you will be more familiar with the underlying instrument. So here this is a 4 hourly chart, and it's pretty simple. I think let me just zoom in a bit so that we get a fair bit of idea of the oscillators charting. So this is the 4 hourly chart, and here you can notice that starting from the sixth week of this year, the Euro USD has been in a bearish momentum. So as per the awesome oscillator, the momentum is shifting around 5th of February, and then it continues till almost 21st of February. So for 15 days, the momentum is bearish. And suppose if we were using the awesome oscillator, and we had simply put in a condition that whenever after due consolidation the price looks optimum and awesome oscillator is in the bearish territory, then go for the sell trade. Then in that scenario the algorithm would have of course brought in the profit, I guess. And but one thing is that not every time we get these large moves, these large trend momentums, and more often than not, it's kind of topsy-turvy. As you can notice here, the momentum is bearish, then again it turns bullish, and then again it turns bearish. So many a times, similar scenario plays out in the market. Just let us go back in time to figure out more instances where. So here this is one of the prime example, and as you can see that even the awesome oscillator is struggling to give us a clear indication of the underlying instrument, as the momentum is shifting from bullish to bearish, from bearish to bullish in a pretty short amount of time, pretty short span of time, and that is making our job difficult. And that's why it's not so simple to simply use one indicator and to expect that we will be making money with indicator giving us all the required parameters for the trade. So this is the shortcoming, and every indicator has some, but still it's a fairly useful indicator and fairly stable. And what we can do, we can simply continue with trading with the trend as long as these negative values are rising. So here you can see actually falling. Here see the value is at minus 0.0009, and then it falls further to minus 0.0019. So whenever the negative values are falling, we can continue to look for short sell trend, and whenever the negative value starts to rise, so here it is minus 0.0062, and then it rises to minus 0.0056, and again in next period of 4 hours it rises again to above minus 0.005. So here we will simply continue to look for trends when the last 4 hours awesome oscillator value is less than the prior value. In that sense, we can say that the momentum is still strong, and the prices are in the bearish momentum, which we can try to exploit using the sell positioning. So here that can be utilized, but as I explained to you, sometimes it's pretty volatile, and now even if we were to go for a trade when the prices are, when the negative values of the awesome oscillator are falling, even in such scenario, one thing which we always need to keep in mind, where to keep the stop loss. So suppose if we were to go for a short sale around in this hour, after two candles have closed in red, we look for a sell trade around 22 GMT on 19th of January, and 22 GMT works out somewhere here. So the if we go for a market open, it will short sell, and the price will drop by around 20 pips. But since we are trading on 4 hourly charts, I would suggest that our target should be greater, and of course the stop losses as well. So what happens here? It goes in 20 pips profit, and then again it comes back to go in 20 pips loss. So it's pretty volatile here, and if suppose there was a stop loss, it might get hit if it is within the stop loss range, and subsequently it's not going to change the trend, and again it will keep falling. Again the negative values will start to rise, but only on 23rd of January. So because of these things, because of the optimum entry points which we need to make sure that we don't lose too much of money in case we are wrong, and we should be making good amount of money in case we are right. For that we will need to again look deeper in how this process is forming up, and utilize the maybe hourly or even 15 minutes, 10 minutes, 5 minutes, whichever will fulfill our purpose of optimizing the entry, which is going to help us make more money, can be called in and applied to give us an entry point. So here we will keep this 4 hourly awesome oscillator as our guiding light, which will decide whether to go long or whether to go short. So the basic condition will be that the negative value should be falling and the positive value should be rising, and once this value reaches the top, and then if it starts falling again, we will stop the buying. And similarly for the sale, we will be looking for sale trade only when the momentum is strong and the negative values are still falling. As and when the consolidation happens, and when the price starts to recover, I don't think it's a good idea to go for fresh short sell. So that is the reason I have decided to choose this awesome oscillator on 4 hourly charts. Now, so far so good. Our job of creating outer layer for the inner workings of the algorithms is over. Now coming to 1 hour, as you can notice that on the 1 hour the volatility will be pretty subdued, and as here you can notice that now the negative values have started to rise, and in such a scenario we can't look for a buy trade. Our mandate was to look for a sell trade only starting from 5 GMT of 12th of March, and prior to that we had the mandate to go for any long trade till 17 GMT 9th of March. But after that momentum changed, and here also again on the sell side the momentum seems to be changing, and because of that we are not going to look for any sell trade now. But to optimize the conditions we will need some lower hour charting, and where we can put the entry and exit points will be determined by this. So here you can notice that we have this bit of corrective move starting from around 1.145, which eventually even came to around 1.105. So fall of almost 400 pips for the Euro USD from the recent peak at the start of last week. And now, as the Federal Reserve has decided to cut the interest rates almost close to zero again in today's session, we are seeing buying momentum. But our job is to allow the algorithm to trade whatever the circumstances and not interfere much. And in such scenario, it becomes pretty important that we are designing and implementing a very efficient setup, which will not end up losing too much of our money in case we happen to go wrong. So we use the same technique here on the hourly chart as well, as we saw that we wanted to sell only when the negative value is falling. So again we use the same criteria. We bring that parameter for the 1 hour also, and we will be looking for short sell only when the negative value of this awesome oscillator is falling. And for such a scenario we need to see enough of proof on chart that our strategy might work as we are desirous. So here let us change it back again to 4 hour, and suppose if we are going to look for buy trade, as here there is nothing much that can be done. There was shorting opportunity starting from 5th of January to 5th GMT 12 March, but now that has passed. And let us take these two examples, and as we can see that awesome oscillator turned positive around 22nd of around 22 GMT 23rd of February, and from there on after due consolidation it picked up the momentum, and eventually a high closer to 1.15 was made. And now let me check the time when it is shifting, that is 22 GMT, and we tally the time on hourly chart. And let me again check the 4 hourly chart. Here we have 22 GMT, 23rd of Feb. So we need to go back almost. So this is our desired area of entry, and here as you can notice that if we simply keep a condition where the buying momentum is increasing, and in such a scenario we can continue to look for a buy trade. But one thing is, as you can notice on the hourly chart, by the time the momentum shifts from bearish to bullish, large move is already there, as you can see here in this instance, as well as around 14th GMT, 24th of February. So in both these cases, I think we will again need to add some different indicator, or plan it better, and we will keep underlying conditions same, that the positive value on the hourly chart as well should be rising, and for the sale the hourly value of the awesome oscillator should be falling, and that will help us whether the underlying instrument is in the bullish territory or in the bearish territory, and we will achieve that using the positive values for the buy trade and the negative values for the sell trade. So let's get started. And given the fact that order window will be of 1 hour, I think we will also need to add some further instruments. So we are going to need the awesome oscillator. For the time being, we are going to need two. Before that, we do the standard instrument subscription component, info and logical. So here there is a block. We are going to need 3 blocks. And we will add the instrument subscription condition just to make sure that algorithm doesn't misfire. Sometime if we have not done the instrument subscription, the algorithm continues, and you can say even open the trade on another instrument on which the algorithm is running, different algorithm, not this one, not the same. So we go for default variable, default instrument. The default instrument has been defined for EURUSD, so EURUSD is being shown here also, you can notice, and then we turn it to on candle. And this time around, I think we should do the on tick method or on candle. Both should work fine. For the time being, let us stick with the on candle method. So we have done this first condition, and then again we put the same parameter, and this time we utilize the Euro USD. And Euro USD. Finding Euro USD is very difficult. Oh, it's frustrating that instrument is kind of hiding within this list. If we don't get the Euro USD, we will simply change the instrument to say maybe USD JPY. So now let's drop this USD JPY, Euro USD. We will simply look for USD JPY. It is somewhere, but oh, Euro USD, we got it. Okay. So we connect this equal to here. So this will complete our instrument subscription requirement. The candle instrument has been defined for Euro USD. The last bit candle instrument is going to be equal to the Euro USD, and here we add the position amount. Position info, all position amount. We want to make it sure that there is no existing condition which has been curtailing our algorithm's ability to trade. So position amount is now set at 0. Let's connect this and connect this. We are going to need, I think we will need two awesome oscillator block for defining the 4-hour charting, and then two awesome oscillator blocks for 1-hour charting. So cumulatively we are going to need 4 awesome oscillator blocks, and then we will try to make sure that our entry is at the optimum point and we don't end up losing too much of our money. So let's see. We bring in 2 more oscillator blocks, and then we will define the parameters, info, indicators. this. Now the default time frame for 4 hourly will need to be modified. So here the time frame becomes 4 hours. I think we are now also running short on time. So we will simply change this value and then carry on the development in tomorrow's session. The shift 2 and the shift to 1. Oh, this is a mistake. I think I overlooked it. So let's change the value. Here we have changed it to 4 hour. This will be shift 1. This is the MA time frame. SMA is being used for 5 periods and the 34, both these SMA values. And we haven't made any changes here. The close price is going to be used. And now time for shift 2. Same for the hourly chart also. The time frame will be 4 hours. Sorry, 1 hour. So we make it hourly here. And hourly here also. Let's change the shift. One will be shift 1, one will be shift 2, shift 1, and 2. So this is the primary requirement for our algorithm which we have done in today's session. But since we are short on time and I don't think I will be able to explain the full setup in today's session. So we will continue to work with tomorrow's session with the same instrument and of course same underlying currency pair as well. So that's it from my side for today's webinar session. If any of you have any query or any idea to share, you can write it in the comment section. And before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and the similar risk is also there even after you automate the trading. So see you tomorrow. Goodbye.